Thanks for watching the news at 1. Let's take a look at your market news now. Asian markets tumbled today while the euro hit a 10-month low as turmoil in Italy sparked a dash to safety. Fresh worries have also been brought to the fore about the China-US trade war. Tokyo stocks closed lower today, extending falls on the global bourse on political uncertainty in Italy. The benchmark Nikkei share average lost 1.52%. Sentiment in Hong Kong was also dampened for similar reasons. In addition, property counters were hard hit. The Hang Seng Index declined 1.4%. Chinese stocks hit a 19-month low, with the Shanghai Composite Index ending 2.5% down. Suffered losses last night, driven by risk sentiment spurred by fears around Italy's political crisis. The Dow Jones Industrial Average fell 1.58%. The S&P 500 lost 1.116%, and the Nasdaq Composite Index fell to a lesser degree, closing down 0.5%. Let's go to the Johannesburg Stock Exchange now, where our markets anchor Nompumelelo Siziba is. Nompumelelo, good afternoon. The Rand making a recovery of about 1% today. What's leading to that?
Thanks very much, Nzinga. Not quite sure about that, but I'll pose that question to our analysts. But certainly the Rand is firming, and it's having the consequence of the mining counters not doing so well. You know, when the Rand is weaker, that tends to be positive for mining counters. But on this occasion, it's firming. So we see the mining counters really hard hit, as you mentioned in your commentary there. The all-share index down generally pretty much right across the board. There's general risk aversion right across the globe, and it's being triggered by what's happening in Italy and concerns about whether that country will end up also considering leaving the EU, which will have all sorts of ramifications for the euro and for the whole European project. And the euro is closely linked with what happens to the local currency as well. So that's what's going on, and that's what's driving markets. And on top of that, there are some fears brewing again around the US-China trade relations, because the United States came out with a statement again yesterday saying that they're going to be targeting certain Chinese goods. And this is just after, a few days after they made a joint statement that is the US and China to say that, look, we are, having a meeting of minds. We're going to try and look at arranging a better agreement so that we avoid trade wars. So some concerns there. And then in company news, we see that Spar, the grocer, came out with decent results of the interims, that's for the 6 months to the end of March 2018. And they saw a massive jump in profits that are going to accrue to shareholders. Let's take a look at the indicators. Well, I'm joined by Viv Govinda. He's from Rand Swiss. Thanks for joining us as always, Viv.
Thanks for having me.
Good stuff. Risk aversion, it was there yesterday. It's there today. What's going on?
Slightly reduced today, but yeah, it's still there. The thing is the Italian situation, and plus we have a few more, let me say, a little bit of volatility again with the US-China relationship as well. With Italy, basically, we're still feeling the after effects of the two populist parties in Italy not being able to form a government that was approved by the president. And the possibility of elections coming about as early as possibly August this year. In that scenario, the fear is that the move by the president is democratic and will cause a backlash among voters, and the voters will say, hey, look at these guys not wanting us to, not wanting the reflection of our particular voting rights to come through. Therefore, we're going to vote more for the populist parties as opposed to in the last election. That could cause, real instability in Italy. With regards to the China-US situation, apparently the US is once again pushing forward with tariffs, etc., against the Chinese after being a bit, off the the pedal a few weeks ago with that ZTE situation where the US basically pulled back on some of that rhetoric, and Donald Trump assured them you're not going to put them out of business, etc. And that's also increasing uncertainty in the globe at the moment.
We know that the US dollar is a big driver for global markets. What's happening with that at the moment? Is it up or down, and how is it impacting on commodities and emerging markets? Yeah,
look, I mean, we particularly have obviously had a bit of weakening yesterday in our currency versus the dollar, and now it's kind of strengthening a little bit. So it was a bit of weakening when we first had that news coming about the Italian situation, kind of bouncing back a little bit from there. But going forward, if we do see a situation where the Italian situation gets a bit more, hectic. If we do see in August that the populist parties increase the share of their vote, we would see the dollar strengthen. That would be negative not just for other parts of the world, but also be negative for the dollar. In the short term, it'll be good. In the longer term, it'll cut down in terms of exports. It'll make it more harder for them to basically maintain a good current account balance, and would also cause more uncertainty and more tensions with places like China, which would benefit in terms of exports to the US if the dollar was stronger.
And then, of course, today we had some data come out, credit extension figures for April. That number slowed to 5.07% compared to 5.98% in March. What does this signify to you, if anything, and does the number have an impact on financial counters?
Yeah, look, it is what's the case of one swallow doesn't make a spring, that's the kind of term. One indicator doesn't make a big bit of difference, but the trend is, of course, not great. If you do have a reduction in credit extension, that means people don't have demand for credit. That means maybe there's not as much confidence as we had hoped to be, especially among the consumer. Household debt is obviously a huge, a problem for some people out there. They can't afford to borrow more money, and therefore that may be showing a sign of stress. Also, they may not be confident about the way things are going, and therefore they might not be buying as much as they would otherwise be. So we saw this big uptick in confidence, just after Cyril Ramaphosa was elected as president of the ANC and then of the country, or appointed president of the country. But I do think we're seeing some pushback. Of course, euphoria is decreasing, but also I do think that the petrol price hikes are putting a bit of pressure on the consumer at the moment.
Indeed. And then, as I mentioned, grocery store Spar has come out with their half-year results. That's for the 6 months ended March 2018. Revenue rose 5.3%. Operating profit was up 9.1% to 1.3 billion rand. And profit to shareholders rose 13.2%, which is quite nice. Yeah. On the face of it, looks very nice. But what do you think of the stock?
Well, one thing they showed was positivity in Switzerland, where they got profits in Switzerland after having a loss, but that came on the back of lower sales. So maybe they just cut costs more in order to get that profit margin up. Also interesting to note is that even though the average number is about 5 point something, the growth in South Africa was higher. So obviously the South Africa growth was lower than South African growth itself, showing that it's a pattern that a number of these companies have followed when they've gotten out of South Africa to go and do operations in places like Australia and other parts of the developed world. It's harder than you think to make a good business over there, especially in those markets that are quite saturated, quite developed. And so Spar, I think, is also seeing that there's more growth in South Africa than there is offshore. Sometimes I wonder if these guys want to go to the developed world, have expansion to the developed world, just because it's better to spend more time in London than it is in Lagos. You have to spend half a year in the offshore business, rather spend in New York or London or Sydney than in, say, some of the other parts of the world that may be more difficult to live in.
Yeah, well, it doesn't make sense if you're not getting the necessary returns, does it? And then Star, they came out with a statement yesterday to say that they've changed their company name back to Pepkor. Of course, I guess it's them wanting to distance themselves from Steinhoff because it's Steinhoff Africa Retail. Your thoughts on this?
Well, look, it makes perfect sense. Steinhoff may have been a great name a couple of months ago. It's only a couple of months, not even a year ago. Yeah. A couple of months ago it would have been a great name, but right now it's not a good name. Everyone knows Steinhoff's situation. Everyone has a bad impression of Steinhoff. And if you basically had a South Africa group in your name, you don't want to be basically associated, especially if it's not as vulnerable as the Steinhoff International. And that's been shown with the share price. Even though Star has come down a bit, because of the news, even though it bounced back and came down again, it's nowhere near the kind of negative performance we saw in Steinhoff International. And therefore, why be associated with a liability if you can change it? And it makes perfect sense to do it.
And I see that they're also joining the queue to claim for that 500 million, is it 500 million? Yes, rand that was put aside for executives.
Yeah, look, I mean, I don't know who these executives are. Taking the money, this money here would basically indicate that this is your retirement policy. Because if you do take this money and then you go out and try to get a job elsewhere, I think your name would be so tarnished by the fact that you took the money, from a company that is in this kind of dire straits. that it would be quite negative. It had to be a retirement policy. Other than that, I would think it's best for you in your career to just say, no, I'll give it back.
That's right. All right. Thanks very much, Viv, for your time. That was Viv Govinde, a portfolio manager at Rand Swiss. After a short break, Nzinga with more business news for you.